Welcome to the first video in our 5-part series, The Top 5 Real Estate Strategies. In this video, we'll dive into the mysterious and enticing world of the buy and hold strategy. Have you ever pondered over how this strategy works in real estate? Well, we're about to reveal its secrets together. The buy and hold strategy, as straightforward as it sounds, involves buying property and holding on to it. Sounds effortless, doesn't it? However, it's more intricate than it appears. This approach involves strategic decisions, understanding the market's ebbs and flows, and a lot of patience. It's not about merely purchasing any property and expecting magic to ensue. This technique has garnered a lot of attention from investors for various compelling reasons. Now let's delve into the details of how exactly the buy and hold strategy works. The first step to successful buy and hold real estate investing is thorough research and planning. Now, this isn't about merely browsing a few listings and jumping in head first. It's about understanding the real estate market in depth, recognizing trends, and predicting future potential. Choosing the right location is crucial. You want to invest in a place that's on the rise, where demand is likely to grow, not dwindle. Look for areas with flourishing job markets, good schools, and appealing lifestyle amenities. Then comes the planning. You're playing the long game here, so your strategy should be geared towards long-term growth. This includes having a clear financial plan. Understand your cash flow, anticipate expenses, and plan for unexpected costs. And remember, this isn't a get-rich-quick scheme. It's a marathon, not a sprint. Patience and persistence are key. Without proper research and planning, even the most promising real estate investment can fail. So do your homework, plan wisely, and set the stage for a successful buy and hold real estate investment. Once you've done your homework, you're ready to acquire property. But how do you go about this crucial step? Let's break it down. The purchasing process begins with finding a suitable property. You might be tempted to jump at the first one you see, but patience is key. Take your time to consider a variety of properties, compare them, and choose the one that best fits your investment strategy. Next, we have one of the most important aspects of real estate investment: buying at the right price. This doesn't necessarily mean buying the cheapest property on the block. Instead, it's about finding a property that's priced below its actual value. The difference between the purchase price and the property's true value is your initial profit. The condition of the property is another significant factor to consider. A property in poor condition might seem like a bargain, but it can quickly become a money pit if it requires extensive repairs or renovation. On the other hand, a property in excellent condition might cost more upfront, but could save you money in the long run because it requires less maintenance. Now, let's talk about the potential for appreciation. This refers to how much the property's value could increase over time. Factors like location, local market trends, and planned developments in the area can all affect a property's appreciation potential. In addition to these factors, don't forget about financing. Unless you're paying cash, you'll need to secure a mortgage. Shop around for the best interest rates and terms, and make sure you understand all the costs involved. Finally, always have an exit strategy in place. This means knowing what you'll do with the property if the market takes a downturn, or if you need to liquidate your investment quickly. Having a plan B can save you a lot of stress and potentially a lot of money. Remember, the profit in real estate is made when you buy, not when you sell. So make sure your purchase ticks all the right boxes. This way, you're setting yourself up for success from the get-go. After acquiring a property, the next step is managing it effectively. Now, you're probably thinking, easy enough, right? Well, hold on to your hats, because property management isn't just about collecting rent checks. It's a multifaceted role that includes tenant management, property maintenance, and financial management. Let's dive into the first aspect, tenant management. This involves finding and screening potential tenants. It's crucial to find reliable tenants who pay their rent on time and take care of your property. How do you do that? You can run background checks, credit checks, and even conduct interviews. Don't forget, a great tenant can be worth their weight in gold in the long run. Next up, property maintenance. This is all about keeping your property in top-notch condition. Regular maintenance can prevent small issues from escalating into major costly repairs. You might be thinking of leaky faucets or peeling paint right now. But let's not overlook the importance of property inspections. Regular inspections can help you spot potential problems before they become headaches. Remember, a well-maintained property is more likely to retain its value and attract quality tenants. Now let's talk about financial management. This is where you keep track of the income and expenses related to your property. You need to monitor your cash flow, ensure timely payment of property taxes, and handle insurance matters. It's also essential to understand the tax implications of owning rental property. Proper financial management can help you maximize your profits and avoid unnecessary costs. Property management can be time-consuming and complicated. If you're not up for the task, consider hiring a professional property manager. They can handle all these aspects for you, allowing you to enjoy the benefits of your investment without the day-to-day hassles. Remember, the goal of the buy and hold strategy is to generate a steady stream of income over time. Effective property management is key to achieving this goal. It can help you maintain a healthy relationship with your tenants, keep your property in good shape, and ensure your financial success. Good property management can make the difference between a profitable investment and a financial disaster. So, make sure you don't overlook this crucial step in your buy and hold real estate strategy. The final step is to plan for long-term growth and devise an exit strategy. When it comes to the buy and hold strategy, patience isn't just a virtue, it's an essential part of the game. The real magic of this strategy lies in the power of compounding, and this can only manifest over an extended period. So buckle up for a long, rewarding ride. Now, you might be wondering, how do we ensure long-term growth? Well, two key elements can help here: property improvements and rent increases. By continually improving the property, you not only increase its market value, but also attract high-quality tenants willing to pay a premium. These improvements could range from simple cosmetic enhancements to significant structural changes. Just as you invest in your property, you should also be prepared to adjust rent prices over time. This isn't about squeezing every last penny from your tenants, but rather keeping up with market trends and the value you offer. Regular, reasonable rent increases can contribute significantly to your property's income potential, driving your long-term growth. Now, let's talk about the exit strategy. Even though the buy and hold strategy is a long-term play, there comes a time when you might want to cash in on your investment. This could be due to a variety of reasons. Maybe the market conditions are ripe or you're ready to retire. When that time comes, you have several options. You could sell the property outright, benefiting from the appreciated value. Or you could refinance to unlock the equity you've built up over the years. Alternatively, you might choose to pass on the property to your heirs, ensuring a legacy of wealth for future generations. Remember, the best exit strategy is the one that aligns with your individual goals and circumstances. So take the time to consider your options and make an informed decision. With a solid long-term plan, the buy and hold strategy can generate significant wealth over time. So take the leap, invest wisely, and watch your wealth grow. Now that we've covered the basics of the buy and hold real estate strategy, let's recap. We began with an overview of the strategy, emphasizing the importance of thorough research and diligent planning. We then delved into the nuts and bolts of acquiring property, highlighting the need for careful selection and strategic negotiation. Our journey didn't stop at the purchase, though. Property management came next, with a focus on maintaining the value of your investment and ensuring a steady income stream. We wrapped up with a look at the long-term growth and exit strategy, reminding you that the best returns often come from patient, strategic holding and selling at the right time. Every step of this strategy is critical. Miss one, and you could be leaving money on the table, or worse, setting yourself up for loss. Remember, real estate investing is a marathon, not a sprint. With the right approach, the buy and hold strategy can be a powerful tool for building wealth. Before we wrap up this video, we want to remind you that this is just the beginning. We've laid the groundwork for the buy and hold real estate strategy, but there's still so much more to explore. In the upcoming parts of this series, we'll dive deeper into each of these steps, offering you detailed guides, expert tips, and real-life case studies that will help you navigate your own real estate journey with confidence. So, if you're serious about amplifying your wealth through real estate, don't miss out. Hit the subscribe button below and turn on the notifications so you won't miss any of our upcoming videos. Join us as we continue to dissect the buy and hold strategy, equipping you with the knowledge you need to make informed and profitable real estate investment decisions. Remember, knowledge is power, and in the realm of real estate, it's the key to unlocking potential profits. Stay tuned, keep learning, and let's build wealth together. Until next time, happy investing.